to another episode of Getting the Cashflow Game with K&K. This is episode 119, and today we're talking about finding deals. Now, before we get into it, first, I want to say, if you really like our podcast, please do make sure that you're subscribed, make sure that you share it with your friends that you think would get some value out of it, and don't forget to leave us a review, because the more we grow, the better guests that we can get on, the more value that we can provide to you. So, we're talking about finding deals. The last time Kenny and I were on, I know we're doing one guest episode in between, but the last time Kenny and I were on, we talked about finding your criteria. So, after you determine your criteria, the next thing you want to do is, you're talking about getting in the game now. You're looking for deals, and you're sizing deals, and you're doing all that fun stuff, and hopefully you're about to start writing some offers.
Yeah, if you did not listen to that episode, you should definitely go back and listen to it. It's good. Just a lot of nuggets in there. And then finding deals. I would say, as we filmed this, I keep telling people, I always have my sayings, but cash is not king in these days.
Cash is trash, right? Is that what you say? No?
Cash is not king anymore because there's so much cash on the sidelines, whether it's buying stocks, Bitcoin, art,
real estate, Michael Jordan cards, LeBron James cards, Air Jordans, classic cars. There's so much, there's like a $2 trillion sitting there waiting for deals. So, why I say cash is not king, because everybody's like, when cash is king is when there's so many deals but nobody has money. That's how I look at it. But guess what? Now there's so much money, but there's so few deals. So what king is the person that can find the deal. That's the king. So, Kenny, I want to ask you something too before we jump into where you find deals.
Boy.
No, it's good.
Okay.
I just love asking your opinion, because you are the king of reading and listening and doing all the study on the market. I had a client, a referral yesterday, that called me, and she said she was looking to buy an apartment building, but she says, I'm not the type of person that, wants to overpay for buildings, and it's kind of like, right, who does? I'm not going to just throw offers out on buildings where the numbers don't work. That's not me. I don't want to just own an apartment building to own an apartment building, and I'm worried that rates are going to go up, and I'm worried we're due for a crash soon. I see the writing on the wall, 2005, blah, blah, blah. People are, values are going down and everything. So I know that none of us have a crystal ball and that none of us can predict, but what sort of economic factors do you see at play here, and how that might kind of play out for this crazy market where people are overpaying, are going over list price to buy properties? Interest rates are very low. Inventory is incredibly low. What do you kind of see as far as this perfect storm that's happening for this kind of hot market that we're in?
Well, I do. Fortunately, I say fortunately, I have, because of COVID, because of Zoom, because of podcasts and things, I'm grateful in some ways for COVID, because we're able to listen to a lot of very, very smart people that I've never got to listen to, and that never came on Zoom, and are like, I'm going to come on Zoom. So why Krystle asked me that, because I listen to a lot of really smart people. I listen to them that are in the middle, on the right, on the left, doesn't matter. The overall consensus is, yes, there is some doom and gloomers, like everything's going to hell in a handbasket, right? Buy gold, buy silver, buy Bitcoin, whatever. But that the number one searched question on Google about real estate is the market going to crash?
Yeah. But then you see people didn't Jamie Dimon just come out maybe last week saying, I can see this run going through 2023. So
that's the market. So it's very, very simple, guys. Everybody is scarred, including all of us, if you're in the game, from last crash.
Well, if you've lived through it and you've been old enough to understand.
And your client is talking about the last crash.
Yes.
So.
And the 80s crash when interest rates were 11%.
And Monsi's, who's sitting over there watching us, God bless her, I'm going to start doing monthly webinars, or whatever you want to call it, but market surveys of what's going on. So Monty, when we were looking at the chart, I even showed her when I said, Monty, look back in 2005 at this one chart. And there's a line here that says, this is like the median, right? On 2005, you look at the chart before, the amount of inventory of building was like literally off the charts. And the line's here. We're down here. We are literally so far apart, right? So number one, because everybody keeps forgetting, since the Great Recession, we didn't do anything for 5 to 7 years, and that is build. We didn't build. We are way behind on building. And guess what? You can't build fast enough. Number two, we are all live in different cities and places of the world, or let's talk about the U.S. So we know that Las Vegas had the worst unemployment. It's slowly coming back. When are you going to go to a concert or convention in Vegas? It could be 2022, 2023. That's not good. When unemployment at some point was 34%. We know that probably delinquencies or foreclosures are high there. Same with a place like Orlando, where there's huge conventions. Everybody thinks it's Disney World. No, Orlando's huge convention business and Disney World. So then we live in a place like San Diego, where there is no inventory. Nobody's moving. Then you go, what's the next thing is? Everybody just refied they could to 2.5% 30-year fixes. And they took $100,000 out, and guess what they did, Krystle? I'm living in my house. I'm tired of my kitchen and my bathroom. Well, take cash out for almost free and go redo it. Hey, I'm so happy in my house. I can live here another 20 years. They might not move. Then there's another thing called the Great Reset. That's what we're dealing with, or the Great Migration. So people that lived in California, San Francisco, LA, New York, they went and moved to places like Florida and stuff. They sold a house in San Francisco where they made $2 million, and they overpaid somewhere in Arizona. Guess what? They didn't overpay because like, shit, this house for $1 million, what a deal. Yeah. I had $2 million. So then you have that. But what caused the last crash? Oversupply, not enough demand.
And a really lax credit box.
But they also did is this here. We call it the heartbeat and pen loan. If you had a heartbeat and a pen, you can get a loan. Those days are gone, my friends, okay? The amount of cash out refinances before the last recession was way bigger than now. The last shitty mortgages that we wrote is that every bank was doing. Name a bank, Wells Fargo, Bank of America, Chase. They were all doing shitty subprime loans they shouldn't have, right? It was all happening. They're not doing nothing. There's banks right now, you're self-employed? No, we're not even doing a loan. What? What do you mean? No. Oh, you want investment cash out? I don't think so. What? I just talked to a lady, Kenny, because of COVID. Yeah. I'm not convinced to the bank. My bank's not doing cash on a refi. Are you kidding me? No. How can they do that? They can do that, right? So I look back at all, but my point is we're scarred from before. And we bring it forward and we go, it's going to happen. So where are we at now?
But what you're saying is, in comparison, a lot of the
fundamentals,
or a lot of the things that were happening back in 2005 are not happening now. So in fact, if you were to compare on your charts and graphs and things that you're looking at, is that there were a lot of other things happening in 2005, the last recession, that are not present today.
Yeah.
So even though we have a pandemic.
So we had terrible underwriting standards for mortgages, massive amounts of cash out refinances, right? People buying third and fourth investment properties with minimal or zero down, losing. My one post I posted about is somebody reminded me yesterday, last week, is the I forget what it's called, Monster, where I said, do not do this. It's the trap. Getting in the trap, like, oh, well, I bought these 3 homes because they're going to go up in value and I'm going to sell them all and be a millionaire. People aren't doing that right now.
They can't.
Right? You have to qualify. You can't do 100% stated on an investment property.
Or 103 or 105.
Exactly.
Yeah.
So, and then obviously, the mindset was, a lot of us back then, it was so crazy. Think about it, Krystle, if you stop and think like how crazy, chaotic. It's like people like, you don't own a home, you're a loser back then. That's literally how the mentality was. So you have all that. What do we have now that's different? We do have massive amounts of money being printed into the system. We have more people than ever right now investing in the stock market, more than ever. Literally, way more. We've got things like Bitcoin out of control. Technology's out of control. Out of control doesn't mean it's bad. It's just things are really moving. But what we do have is, look, there's a lot of people. So is there going to be some type of correction? I always imagine at some point there will be. But there could be a correction in in Nevada, but not here. There could be a correction in Florida, but not here.
The primary thing that I hear a lot of people saying, and that I say too, is that something's got to give because they're printing so much money that we're going to pay for it somehow, some way. What is your view on that?
Well, I just think ultimately at some point there will be more supply in the market. So the prices you see now could cool down. But everybody realizes if we had a 10% pullback, people go, oh my gosh, I'm like, but we just had a 20% increase.
And then what about the argument of rates are going to go up?
Rates have gone up, and then they just came back down. The argument of rates is tough. It's very, very tough. People think because when Jerome Powell's not going to raise rates, it has nothing to do with rates. And I will just say this. There's $350 trillion of debt worldwide. $185 trillion of the debt was in the last 20 years. If you wonder why everybody got rich, $185 trillion. Somebody gave this statistic yesterday, and I'm probably going to hack and get it wrong. They said if you made $1 million a year since Christ was born, which is 2,000 something years ago, every day, and they did the math, you would still not reach $1 trillion.
That's pretty crazy.
So they added it up, BDB, Patrick, and
wow.
They
Since
came
Christ was born, huh?
They came to 800. They're like baloney. They did it, $800 something million. You can make $1 million a day for 2,000 years, and you're not at $1 trillion. We printed $8 trillion. Nobody's ever done this. They don't.
Right.
So they don't. So the one thing is inflation is going to be crazy.
So the one argument that I hear about interest rates is for sure. I mean, I'm sure that they have to go up at some point, and what goes up must come down. What goes down must come up. So one of the things that I hear is obviously since the government is printing all this money and they're adding to their debt, they can't afford to have higher interest rates. Therefore, they will keep them relatively low because they have to be able to pay their debt.
So as a country, with taxes and all the stuff we pay into, we basically make the government, let's say, makes $3.3 trillion, somewhere around there. $1 trillion goes to Social Security. $1 trillion goes to entitlements. $500 billion at low rates goes to paying our deficit. That was before COVID. If rates double, it goes to $1 trillion. So they're servicing debt at 1.75 or around there, at 25 trillion, now 30 trillion. So if it goes to 3, that goes to $1 trillion. So so this is worldwide, everybody. So how do you service it? So if rates go up, the market knows if rates went to 5%, we'd be paying $2 trillion on our debt. We can't afford it. So we're printing more money to say. So you're robbing Paul to pay Peter.
Right. So I guess that's sort of, even though we don't have a crystal ball, before we get into finding deals, because this is always a question. The reason why I asked you this question, Kenny, and so that everybody could hear at least your thoughts on it, was because that's like the number one thing. People go like, well, maybe the market's going to come down and now's not a good time to buy, and real estate's really expensive and I'm worried that it's going to crash and rates are going to go up, and what if? I can tell you, for us, I think it's just your excuse for me not to get a house, and I keep bringing it up because I'm so bitter about it. But you had said to me after we sold our house, is like, yeah, but the market's going to correct at some point, and it's getting pretty hot, and we need to kind of wait. And that was maybe in like 2015, 2016, and the market has continued to run since then.
We've had pullback, and correct.
A little bit, but overall, we are higher than
when we had pullback?
When?
When interest rates hit 4.5%.
Okay, so pull back when interest rates hit 4.5%.
That was before they went to 2.
But how much? Like, I can tell you our house that we sold in 2014 is worth more today than it was when we sold in 2014.
No.
So the market overall has gone up if you compare it from one to
let's
the
just
other.
talk.
So my point of asking all of this is that everybody wants to ask these questions, and then they end up not doing anything because they're frozen by all this talk, like all this noise about, Trump and Biden and rates and, stimulus money and, the market's crazy and people are overpaying and it's going to crash soon and we're overdue for a crash. All this kind of talk. So that's why I want to kind of go through that first before we start talking about buying deals, because a lot of people aren't moving because they keep waiting for this day to come. And my personal opinion is, if your deal cash flows today, look, let me tell you, at least for multifamily, you're not going to get a loan for an amount greater than the property can service. So a bank is not going to give you a loan that's greater than the property can handle. They are so conservative. It's built in. So you're going to know by virtue of financing if you're buying like a decent enough deal that you can at least break even or make a little bit of cash flow, because no lender is going to allow you to get a loan amount greater than what the property can cash flow for with lots of room. So for me, it's like, if you want to keep using the excuse that the market's going to correct, the rates, the whatever, I don't want to not get a deal on a property. My thing is are these excuses? Sometimes it's legitimate. Are these excuses or is this legitimate? This is the conversation that you need to have with yourself when you're deciding if you want to buy. It's the same battle we have with ourselves as well. We think about this stuff too. We, as apartment owners already, you're always going to be thinking about these things, but at some point you need to just get in the freaking game.
So there's a saying, I forget who came up with it. It might have been Charlie Munger. It's quit trying to time them. It's not timing the market. It's time in the market. Mm-hmm. So a lot of stock people, what they do is, Krystle knows I get to talk to a lot of very smart, sophisticated people. I think they are. And whether entrepreneurs have a lot of money, and their philosophy has been over and over, let's just pick the stock market. It could be real estate. Kenny, I just do a cost average. So every month I allocate this much money and I put it in the market, I put it in Bitcoin, and I also set money aside to buy real estate. And every year I just buy real estate. If it's up, it's down, it's up and down. But when I've looked over 100 years, 50 years, 20 years, whatever, the S&P, let's just use that, it kicked back, I think, 10% return. Some years it's up, some years it's down. But if I put money in every year, this is the average. Yeah. So they said, they're doing crypto or Bitcoin or whatever. If you put $1 in Bitcoin 12 years ago, $1 in Bitcoin, I think, was it $1 or $100 in Bitcoin a year ago, and you put $1 in gold, I think Bitcoin is worth it's way more.
Exponentially.
Yeah. So I think the same thing with real estate. So when Krystle and I talk to big owners, they think differently. They're like, this and that. Look, don't get me wrong. If the market crashes, the big owner is going to be like, let's leverage up, let's buy more. Maybe I buy a deal or two a year because that's how I do it. When the market crashes, they might be like, shit, I'm going to go to try buy 10. They're going to get to work. They're going to go leverage more. They're going to be going cash out. Let's go, right? So, but they're always buying. They're buying because they want it. They're buying for tax reasons. They're buying because that's what they do. So I think, again, it comes back to, it's not trying to time the market, it's time in the market. So I think that is correct. Are prices going to come down and stuff? I don't think prices are going to come down anytime soon. But if they do come down, what are we talking about here? I mean, are we going to go build? Are they going to build 1,500 new apartment buildings in San Diego? No, there's not enough. Are they going to build 100? I don't even know if they can build 100 here. But there's other places. So I just think right now there is a run. I think, unfortunately, if you buy a single family home today, it's probably going to be worth more in 2 years. So if you wait, it's going to go higher.
That's another reason for the C property play, because at least in California where we're at, they're not really building a lot of C class apartments. They're not building a lot of workforce housing because the numbers don't work. It doesn't make sense. So that's just another good, I would say, argument for buying C properties as well.
And I will tell you this: there's a lot of realtors I talk to, and the offers. A lot of these people that are buying houses, it's all cash. They say the amount of all cash offers, it's insane. Where do they get this money? I said, guys, have you heard a whole thing called like Coinbase or tech companies that go public all the time? People invest it.
We've got somebody buying an apartment building right now. He's taking profits. out of Bitcoin to buy an apartment building and put a significant down payment.
Exactly. So a lot of people have a lot of money and made a lot of money, and they sit there. So my point is, I'm not talking people paying cash for just $1 million. I'm talking $4 million. I'm talking $50 million, whatever it is. It's all over. People have a lot of money, and people are moving from San Francisco to this or that. So it's very hard. And trust me, like when I listen to Dave Ramsey, who's completely different than I do. I like to hear his perspective. He has a huge audience. People call and go, should I buy now? Well, of course you're going to buy now. Why? It's not going to get any cheaper. Was the market going to crash? No, because he gets the same fundamentals and listings that I do that somebody else does. So I just think when you're looking now, unfortunately, like the mentors told us, is it a good time to buy or sell? Is it going to be more expensive in 20 years or less?
So I know we went off on like a real long tangent before we get into finding deals, but I think it was important, like I said, just for the people who are super confused by all the noise that's out there. It's just a lot of noise right
Look at
now.
the data.
Oh my gosh, but it's so much. It's honestly the talk. Like, it's
but the data's
all
not. But the data's there.
Right. So you have to look at data. And it sounds like you should probably tune into Kenny's market updates because he's going to have a lot of data on there.
Hell yeah!
So now let's get into finding deals. The first and most, like I would say, easiest way if you're looking for apartments, I would say, is LoopNet. And there is this thing. I mean, everybody says all the crappy properties are on LoopNet. Don't look there. That's all the properties nobody wants. They're overpriced.
MLS too.
And MLS. But that may be slightly true, but we've gotten a lot of really good deals that were listed and that were on LoopNet that we've done really well on. First off, LoopNet is great because you can see what brokers are listing deals and what their activity is. Love that. So now you can call brokers, you can see, some of them might be newbies, some of them not necessarily a bad thing. The other thing is that you get practice underwriting deals. So you want to start looking in certain areas. Maybe that's not the property that you're going to buy, but that is good practice for you to run your numbers and go through the exercise. I know people who've underwritten, 100 deals before they bought their first one. I'm not saying that you should do that, that that's right or wrong or good or bad. But LoopNet will give you a lot of practice. It'll let you look at deals without having to call people and get information. You can do it at night. You can do it in your free time. You can do it when nobody else is working. It's a good option. Secondly, there are a lot of gems in LoopNet, in my personal opinion. You need to look for these deals, but sometimes there are deals that sat on the market forever, went in and out of escrow for whatever reason, and actually it's a good deal. We helped one of our clients buy a property just like that. It went in and out of escrow 4 times. It was listed for like 6 months. No, everybody was ignoring the deal because they just saw it. It was like old, it was stale, whatever. Our client bought it, and he, in less than 6 months, we helped him rehab it, and he got $1 million in equity after he bought it. So I think it's a total misconception that LoopNet is a bad place to find deals. You can certainly find deals, and then you can also find brokers to help you build the relationships. Ken, what do you think about LoopNet?
Yeah, I mean, there's LoopNet, there's MLS. The cool thing about Krystle's right, deals get bad stigma. That's the name. Like they're like, oh, I heard the seller's a pain in the ass, and yeah.
Or I heard there's a foundation problem.
He's not accepting offers,
yeah.
So, yeah. I mean, honestly, there's a lot of deals that happen. There's always deals, and we know people personally. Krystle's financed them. I finance them. Like, there's deals that have been on the MLS last year. I was like, that was listed? Yeah. Really? Damn, I don't even buy a 4-unit. I would have bought that damn deal.
Yeah.
Like the Cashflow, like I saw one of the best Cashflow 4 units like my client bought ever. And I was like, I call him, I go, how did you find that was on the MLS? He goes, yeah. How'd you guys, I was like, he's like, I was going to have to go like rob a bank if I had to do close. I'm like, this is probably one of the best Cashflow deals. So,
but honestly, I think it's about your creativity and your ability to look at a property and see where you can add value. Because if you're just looking at the property based on what they have on paper, you're right. It's probably not going to look like a great deal. But if you drive the property, you look at the numbers and you go, oh, I can do this, I can do that, I can increase the income here, I can maybe add storage, I can maybe charge rubs, I can, all these things that maybe a broker's not necessarily thinking about, because a lot of these brokers, some of them are not apartment owners. Like they just are kind of doing.
Some of them are residential guys,
and they have a formula, and they just kind of use the same thing over and over again, and don't give it a ton of thought, and they don't really understand where they could add value. So you have to understand where the hidden gems are, and that's how you're going to find properties. So I 100% think LoopNet is a great place.
Let me
to
say
start.
one last thing about LoopNet MLS. Just a I don't know if it's a strategy or just my opinion. If you want to have success in a place like LoopNet and MLS, you need to be on there all the time. You need to set up alerts so when something comes on, you immediately jump at it, you look at it.
I get an instant email when something new is listed.
Exactly. So that is the key. And like Krystle said, is you're ready to go. You have your lender. You got your cash. You know your deal. Look, you know your criteria. We talked to you before. You know. So when something comes up, you're like, that's in my wheelhouse. Let's go. Call the broker. Move. I got my lender. You could be like, hey, here's my lender. Call her now. Call Kenny. I tell people, have that person call me. I've helped people literally when buy the 4 unit. Yeah. Let's go. This guy's looked at 4 deals. If you he is ready. He lost 4 deals. He wants this deal. Let's go. That will help. But also
this is a market. You have to be ready.
Be ready. So my thing is LoopNet MLS. Be ready to move. Know your criteria and strike. Don't wait around. Don't sit there and think about it. Just get it and go.
Yeah, and for everybody, especially if you're new, you probably don't have like an analysis spreadsheet or a form. You can always email us or DM us on Instagram, whatever. If you're looking for a spreadsheet to use for your analysis on deals, just DM us and I can send you one. It's quick. Like for me, I tell people all the time, if you're looking at a deal and you're not sure what it qualifies for, or you just even want my opinion, send it over. I mean, I literally do this every day for a living, and it takes me like 10 minutes to underwrite a deal. Like it's just to the point where it's so fast and so easy for us that we underwrite deals all day long. So but you definitely want to have that spreadsheet ready so you can kind of plug the numbers in, do a rough underwrite. Like just because you do your rough underwrite, that you're not done with your underwriting at that point. Then you have to verify everything after your offer is accepted, and you have to make sure it's all accurate and whatnot. But you do a rough underwrite, I would say. You drive the property, you make the offer, and then you start doing all your due diligence to verify all those numbers. But up front, you're going to want to run the sizer and make sure that the numbers work for you, or at least know at what price the numbers work for you. So that way you can be quick and ready to write an offer.
Yeah, the next one is brokers. So I'll jump in here. Brokers are, honestly, that's the goal. Why is it the goal? Because that's how you get the off-market deals. Not the only way, but brokers it's building relationships.
And it's not to say that off-market deals are always the best deals either.
No.
But, think about it. A broker's job is to find deals, okay? So they spend every single day of their life, several hours a day, hunting for deals, talking to potential sellers, building relationships, driving properties, going through escrows with people, like learning all these details. So they're the best person. Like for you to think that you can find deals without brokers is crazy, just because they are like boots on the ground every single day finding deals. That's what they do. It's their job. It's how they get paid. They don't get paid unless a deal closes. So they are professional deal hunters.
And let me just tell you something about brokers, which a lot of people that might be listening to this may not know, but this is really, really important. Some brokers have been being brokers for 10 years, 5 years, 20 years. Some broker that might be bringing you a deal might have been talking to this owner for 5 years, 7 years. They put a lot of work, a lot of effort, right? So when that deal is going to come out, trust me, they already know who is a potential buyer. So I will just tell you this. You might work with one broker, 5 brokers, whatever it is. It doesn't matter. It's your relationship. We interviewed, I'm trying to think over there in Dallas, Mike, syndicator.
Darren Batchelder?
No, Mike.
From
Michael Becker.
Michael Becker.
He meets.
Or you said Michael.
Yeah. He meets
Yes.
with. He told us live. He meets with. His job is to continuously meet with these 9 brokers, whatever.
And build relationships.
My point is that when that deal comes on, they might be saying, "Hey, Kenny, I got this lady. She can close her. What do you think? Are you ready?" They want to put that deal in front of somebody that's going to execute and make them look good. So a relationship with a broker is not just like hit it, quit it. It's like,
and those relationships take time.
yeah, but you could be getting that deal that you want to work up to in 3-4 years that you got to stay with them. So work those relationships. Like Michael says, I take him out to lunch. We go. I don't know, they do different things. They
and
hang
you have
out.
to be careful. I mean, you don't want to waste a broker's time because I think, this is the thing. What I learned is the best way to build relationships with brokers is to do deals. Like basically be a buyer, put your money where your mouth is, do deals. So over time, so the first time you work with a broker, they're not bringing you their best secret deal that they're going to bring to their client who's been building a relationship with them for years, has closed several deals, no problems. They're not going to bring you those deals. So if you think you're going to get some home run deal, yes, there's a chance, but don't expect that. That's not the expectation. You have to build a relationship with the brokers. And quite frankly, you don't want to really waste their time and call them and ask all these questions and suck up because they do talk. Like I actually have people that I've spoken to that are looking for apartments, and multiple brokers will call me and, hey, have you talked to this person? Wow, yeah, they've been like wasting my time. They've been looking at all these deals. They never performed, and they've gotten an escrow a few times and were such a pain in the butt, totally unrealistic, fell out. Like, then I had egg on my face with the seller. These are the kinds of people who are not going to really build those relationships. So you do have to be strategic about that. I personally think that yes, eventually you're going to have lunch with a broker. Like you do your first closing with a broker, you buy your first property, you're going to go to a closing lunch or a closing dinner and thank them. You're going to do something like that. So then you can build on the next relationship. Tell them your goals. What are you looking to do? When's the next property you think that you're going to want to buy? What's your overall strategy? So, you're going to build those relationships, but they take time. And so to think that you're going to get the best deal from a broker like day one, it's not going to happen. But you need to start building that relationship now, because I will tell you, we have won deals on multiple occasions with several other offers based on our reputation in the community and the relationships with the brokers, and even sometimes the sellers or the property manager for the properties that are selling. So over time, people are going to get to know your name, either for good reasons or bad reasons. You can choose how that's going to be, and that is how you're going to start building relationships with brokers.
Think about it this way, too. You don't have to go every broker. You're going to find that work, but imagine this, and this is a true statement. There are brokers that are like, they want to close a deal with you. They're excited to close a deal with you. They just want to close a deal with you because they think maybe you're a great person or a great guy or vice versa, right? There's that mutual respect. That's what you're going for. So if you want to go, well, what kind of relationship? Build a friendship, a relationship. They might not bring you a deal, but they might call you in 2 years and have that deal. Oh my gosh, you said you wanted a 50-unit deal here? Well, I got it. This is the deal right here. Like, holy smokes, let's go, You just never know. So
you don't. So you want to kind of start.
But I agree with Krystle, like, being a pain in the ass. Look, if something goes wrong in the deal, take him out to lunch, Go say, hey, I'm sorry it didn't work out. We're still in the game. Like, I don't want you to hold be transparent. Don't be a weirdo about things, because, if things aren't transparent, if things are weird on your side, they're probably feeling the same way. They're not going to waste their time with you.
Okay, so after brokers, this is pretty much how we find deals, through LoopNet, through brokers. Like, this is pretty much how we're looking for deals.
Let me give you the mailer story.
Other people are doing mailers, like literally sending out letters, and Kenny can kind of go through this with you. We don't do this, but we have many, many clients who've been very successful.
We might be doing it when we buy a house one day.
When? Like when I'm 80?
One day.
Or like, yeah.
It'll be before you're 80.
When I'm going into the retirement home?
So, a lot of people are like, oh, mailers don't work, this and that. So, let me just tell you they do work. I have a client, not in San Diego, San Clemente. And he has been sending mailers. He's a mobile home park owner, multifamily owner, and he owns a lot of single families. That's about right. Yeah. Mm-hmm. He had some exchanges, and this is when short sales were like kind of going on down, and I was like, short sales are still around. So this guy got listings for short sales because this person is really nice. Everybody wants to work with this guy, like, for sure. So he was sending out this letter. It was a picture of him and his family, and like a letter, like, I'm an investor, and I was like, does this crap really work? We've done a lot of finance for him. I don't know how much, probably $30-40 million of probably financing. This guy bought some incredible deals by the letter, and I remember it was like back to back. I was like, from the letter, he's like, let's say he bought 15 homes in this San Clemente area. I bet you 5 of them were from a letter. I couldn't believe it. One was a 90-year-old guy that did this rent back. One was this lady that just oh my gosh, you got your Lowe's, the perfect timing. My mom passed, and I just like don't want to list it. And Corey's like the nicest guy. Oh, I'll do this. So it works. There is a strategy. You gotta be you gotta keep doing it. But it does work, and it can work. And we know people hear that it's worked, so it can work. My suggestion is if you're gonna send a letter, what works for people I hear is put a picture with you and your dog if you don't have family. Or you, your family, your dog. You want to be friendly. You want to be kind. You want to be like they can see personable through your picture. And then his message was kind of like, hey, I'm a real estate investor. Let me know if you're interested in your property. We can quick and easy. And that's what he would do. He made sure I make it quick and easy for them.
So where do you find how to send, like where to send these letters to? Who?
So most people target a neighborhood. So, like for him, he's like, I like this neighborhood right around here, a zip code, and he would go to a title rep and get the mailing and then send it out, and he would just basically beat the shit out of that.
So, title rep. So, basically, you can contact a rep at a title company, and you can ask for a list of owners, and you can give specific criteria, and they can pull it. So, for example, when we send mailers out, we'll send mailers out to every owner of 5+ units in California, for example.
Or just here.
You can be that general, but like Kenny said, you could also say, I want to send a letter to every person who owns a 1 to 4 unit property in this zip code or this area, whatever. And then you can actually do the letters that way. So we have actually a lot of people who do it successfully. Brokers do it successfully. People who want to buy properties do it successfully. So it is a way to do it. You just sort of have to decide how you want to spend your time. There's only so many hours in a day. So for us, we don't typically do it because we have full-fledged businesses that we run, and we rely on brokers to help us find deals. But there are people who are doing that very successfully and honestly getting a lot of deals. I've said for years we should be doing it. We just don't. It's an issue of prioritizing our time, and that has not made its way up the list yet.
Yeah, and I think when we're ready to buy a deal because of our relationships, they seem to fall in our lap, but that's obviously, we put a lot of time and effort into that. So if you're new and you have the time, honestly, a mailer is a great idea.
Yep. Any other ways to find deals? I don't think, there's no like secret methods to finding deals. There's a lot of other things that people do that I'm not aware of. Like I think I get, these days I get a lot of like people on Facebook from India asking me about skip tracing.
There's an absolute another way. One of our clients is a real estate investor and just got a cold call, and I was surprised because I'm talking about would never sell his house to anybody, and an agent called him, said I have a VA buyer that fell out 3 times. He's ready to go, wants to buy your house, and first called the wife, and he goes, why do you keep calling me? He goes, well, could you just listen? And he goes, okay. He gave me the offer, woke up next morning, it was in the mailbox as promised, and they're closing on, and he's exchanging to something else. And this is a person that he said, Kenny, I've never done this, and I would never think you'd do this, but it was quick, easy. So, yeah, calling 100% works. Just like brokers that call every single day to find deals. If some people, we know that have in-house teams that call, and they buy deals off market, and then they work with brokers and both. So hammering that phone, you will 100% get deals if you want to do that.
So it just depends. I mean, for some people, this is not their career. It's more of a side hustle or a retirement plan, so they don't have the time to do that. But there are other ways to find real estate depending on how much time you have. And
look, you could do it. You could put things in the newspaper. Everybody's like, that's stupid. Who looks at the newspaper? Well, your grandma does, and she might want to get rid of her house. And let me tell you one thing about that I learned from a guy that sent mailers, that's a flipper, that he learned from elderly people, is that if they're selling a home in an area, number one, they don't want to deal with listing and people coming in. Number two, one of the things is they are very embarrassed of how their home looks. Yeah. Nobody's ever gone into it. So one of the caveats, one lady was like, you're going to buy my house, you're going to sign that when I close, nobody's allowed in here. You demo and get all this shit out of here, then they can come in. I don't want people to know in my neighborhood that knew me from the song how to live.
Yeah.
So what he realized is, wow, old people want it quick, easy, simple, and they don't want to deal with it. And look, that's just what it is.
Not everybody wants to list their property on the market and deal with all these competing offers and having people traipsing through their property. And and providing a bunch of paperwork. So I think sometimes when you're going direct too, you're not going to get all the due diligence paperwork. So if you're new to this, maybe that's not something that you're comfortable with, because a broker is actually going to like make sure that he checks a lot of boxes and walk you through that process. If you are, sending mailers or calling and things like that, you might not be getting all of that information, but you could get a really good deal, because also too, there's no broker commissions to pay. There's other reasons why you're going to get a better deal, but you're also doing a lot of the legwork yourself, and you're taking on a lot of risk. So, but experienced people do it.
I'm gonna give you two more things. My mastermind, a guy was there that's a big home flipper. He does radio. He's been doing it forever. He's famous. He crushes it with radio. The other person, I'll mention his name, as part of the mastermind, was Flipper Flop Tarek. Sorry. There is a new company, don't know what it's called. You basically pay them, and they drive around in neighborhoods, and they spot certain type of properties, and they take a picture or flag it, and it sends that person a postcard.
Well, I will tell you, so outside of all this, like let's say there are real estate investing groups. So there are groups that you can seek out to help you, where if you're looking to buy residential properties, they'll actually find the properties for you and run the numbers, and then you just kind of have to double check them and make a decision on the investment, and you can do that. So that is one other way. Like there is a membership fee, but it's kind of cool because you get access to a community. You can ask people a lot of questions. They have a lot of courses and teaching and stuff like that. So that goes down to hiring a mentor that was one of your team members. So if you decide to go that route, you can. The other thing is if you decide that you're a passive investor, then what you really need to do is just do your research on different syndicators and decide who, the people that you feel confident investing with, and you look at the deals as they have opportunities come up and decide if you want to invest your money that way. That takes a lot of the guesswork out of building relationships with brokers and looking on LoopNet and running all your numbers. Basically, you would invest passively with someone who does all that legwork for you. Then you just double check to make sure you agree with the numbers and the investments and the opportunity, and you write a check and you're done. So that is another way to find deals, is to do it passively through a syndicator. I would say that that's probably the easiest thing. So if you feel like your job's really demanding, or maybe you're just not that interested and you don't want to deal with all this stuff, it's just too much work, management, and all the things that come with being a direct owner, then maybe investing passively is for you, because you can still get cash flow, and then you can actually have someone who is more of an expert in the field that's doing all the legwork, where you can still invest your money and make a return. So that's another way to go.
Yeah. We gave you a lot of...
There's so many options, honestly, that there's really no excuse not to get started investing, whether it's in real estate or whatever. I think, the thing for me is that you have to pick a lane, because there's all these kind of things, like you mentioned today, is like the stock market, and everybody's investing in Bitcoin, and then real estate's really popular. So it's very easy to spread all your time learning about Bitcoin, or learning about certain stocks, or, people are saying like invest in index funds, or put your money in this or that or the other thing. There's all EFTs or whatever the other thing, NFTs, like there's all this stuff coming out, like all these new like trendy things. The thing is that you need to sort of pick a lane, do your research, and then move on something. But the problem is if you're looking at all these different things, you're never going to accomplish anything, because your time's going to be diluted, and you're never going to be making a decision to move on something. So
yeah, I'd say, look, if you really, really want to find a deal and you put the time and effort and energy into it, whether it's, sending out mailers, talking to brokers, looking at LoopNet and NLS, you will find a deal. It's the people that are finding deals, they're on it every day, that are active. It's a part of their routine. It's like if you're listening to this and you're in a sales job, and out of the 8 hours a day you work, 3 hours is originating new business for whatever you do. It's the same thing. If you spend every day originating on trying to find new properties, then you will find them.
Yep. So if you have any questions, or if you want my sizer on how I analyze deals, I'm happy to send it to you. Just DM me, where to find me on Instagram, get the Cashflow Game, Krystle Moore, or you can submit it through our website. There are so many ways to get a hold of us. I mean, Google my name and plenty of things will come up, or Google Kenny's name, plenty of things will come up. And we're always happy to kind of give you our opinion on deals and whatnot, so feel free to reach out anytime. And of course, don't forget to like this, share this, subscribe, and give us a glowing review so that we can continue to bring you more valuable information.
Thanks, guys, for listening.